Hi everyone, today let's talk about the Chinese rate cut, then we'll get into the economic data, and then we'll take a quick look at Max Payne, then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So China cut rates for the first time in 10 months, and this is obviously going against what the rest of the world is doing. It's interesting to see that from China. Potentially their economy is cooling down, and we can't depend on the Chinese expansion to continue to drive growth in the United States. So it's always important to keep an eye on the second largest economy in the world, cutting rates to spur some growth. They went from 2 3/4 down to 2.65, so not a huge cut. But it's definitely worth noting that they're cutting when everyone else is either paused or still raising rates. Earlier this week, they also cut their 7-day repurchasing rate from 2 to 1.9, so they're cutting some various rates from their central bank in order to drive economic growth. And they see here this shows a willingness from policymakers to step in and prop up the economy if needed. Speaking of slowing economies here, we look at retail sales. Core came in as expected, slight step up. And looking at the headline numbers, they were actually much better than expected. We were looking for negative numbers in the forecast, and we ended up getting a positive 0.3%, which in my opinion spurred the rally here today, which was quite aggressive. Looking at Fed futures, just for a moment here, you can see we did step down slightly from that hike in July. I personally think we're going to get a hike in July. Jerome Powell mentioned a potential skip, and then he tried to pull that back, indicating that we're skipping for June and then going back to hikes in July. If that's his position, you would expect that to follow through at this point, and we don't have any data to say that that's not what's going to happen. Of course, some crazy data could come out, but really this is what I'm looking at going into July. Moving over to Max Payne here. Max Payne has not moved, and we are way above it at 441. Highest call strike is now 440, which is crazy. We're way higher than we thought. We're way higher than I would have expected. We're still well above all of the puts, and I still expect all of those to end up worthless on the week. Put call ratio still very high, 1.9. Options, 5.5 million. Nothing's really changed, and I expect to close at least above 436. Moving over to the charts, starting with the S&Ps on the hour and the weekly, you can see we got above my 439.98 level, cut through it like butter, and we're now between that level and 445.49. You can see that here on the weekly chart, just rocketing higher. We're getting very close here to the March highs. Certainly possible that we get into that zone before we find any kind of rejection. Close to overbought conditions here on the weekly chart. Everything continues to look super bullish on the SPY. Very extended, but super bullish. Moving over to the NASDAQ, very similar thesis. We're actually touching those March and April highs right now. We already wicked that level, 137.25. Above that, I have 136.45. Looking to see if we get above that level and then trading up to that 176 level. Overall, very similar thesis, super overbought on the weekly chart, super bullish on momentum. Everything looks super bullish on the NASDAQ. Moving over to the Russell and the Dow. The Russell found a bullish day, got back above resistance, hit this trend. We're waiting to see if we can get above that level and above 189. That would be very bullish. Momentum still fading slightly. Looking at the Dow, we resumed the rally. We had that down day yesterday, hit the 9 EMA, and then we had retail sales pushed us above that resistance. So 147.67 is the new resistance to the upside. Above that, I have 150.92 that I'm watching. But right now we're in this zone looking for 147.67 as my next price target. Moving over to Apple and Tesla. Apple made new highs. These are all-time highs at the finish. And I don't have any overhead resistance in the short term. We're just kind of watching this as it grinds up, waiting to see any kind of signals of reversal. Don't see it right now. Everything is still super bullish on Apple. Tesla, on the other hand, definitely showing some bearishness. Gapped lower, filled the gap, and now it's still in the zone. Perhaps this is a consolidation at 264.68. It's been relentless so far, so it could absolutely chop here, see a little bit of a pullback. And even as a bull here, I think we would like to see a bit of a pullback and then a continuation. This is pretty crazy, and I don't even feel comfortable trading this to the bull side anymore. Moving over to Microsoft and Meta. Microsoft testing its all-time highs. Looks like it's going to take that out tomorrow. Super aggressive, super bullish. You can see we're overbought here on the weekly, but momentum is still strong. Meta also rallying here today, also overbought, momentum also bullish. Not nearly as strong as Apple or Microsoft, but it does seem like it's getting very close to this highly traded zone, up around 330. I would expect that to be a pretty high level of resistance for Meta, but look how low this volume is through here going up to that 330 level, and it certainly seems like we're going to get that follow through on the weekly chart. Moving over to staples and discretionary, staples breaking out. As we expected, this is turning more bullish. Discretionary rallied off the 21, still at resistance here. Looks like a little bit of a double top. Doesn't have that same drive from Tesla pushing it higher. Now we're starting to stall out a little bit on discretionary. So a little bit of rotation here. Discretionary slowing, staples rallying. Interesting to see at these levels. But overall, both of these are still bullish. Moving over to transports here, you can see another huge bullish day, pushed from my 138 level right up to the next one at 243. We're now at these previous highs from February, as well as this downtrend line. Still looks super bullish, and it still looks like we're going higher, but definitely an interesting level of resistance worth watching. Moving over to breadth, both of these got a rally here today, looking at 64.74 on the 200, and then up here at 77.46 on the 50-day average. The rally is continuing. We're making new highs here on breadth, and it does seem like everything is set to go higher over the next few days. Moving over to the dollar here, you can see how we rallied a little bit and then broke down from that structure, making new lows, the dollar breaking down back into this range. And as the dollar goes lower, we're seeing equities rally aggressively, and that does make sense. At this point, you would expect to come back into these previous lows around 101.25. Moving over to J&K and TLT. J&K finally getting that follow-through rally, looking to push up to 92.50. I want to see that rally and take out these highs so we can see more new highs. TLT also showing a little bit of bullishness, definitely interesting. Momentum bullish, RSI also bullish. Still in this consolidation range, so I wouldn't be jumping on the train quite yet, but it does look nice. A higher low setup, pushing up to these previous highs, and you want to see it break out here, and then it would look very similar to the setup that we saw on staples. Moving over to the volatility indices, you can see the MOVE index breaking down even further. At this point, we're looking down to these previous lows, around 97.50 or so. The VIX, on the other hand, still holding in this zone, actually was bullish on the day, which is interesting. That's a higher low setup now. We had the VIX going higher with stocks going higher pretty aggressively. Typically not what you see or what you want to see on a rally, so I'll be watching this one a little bit closer tomorrow. If we see a gap up and start to rally a little bit tomorrow, and stocks are either hovering or starting to pull back, that would be a pretty bearish indicator to me. Again, everything looks super bullish, but I'll be watching this one tomorrow. Moving over to my accounts, I did pretty well, up around 700. I continue to layer on covered calls as we continue to rally super aggressively. So I had that put from today at 359, that obviously expired worthless. I had that covered call from today that I rolled out in time and up one strike, and then I put on a 370 for tomorrow as well. So overall, 3 covered calls on the NASDAQ. All of those are in nice profits. And then for the IWM, I still have that 158. That should be a max profit tomorrow. I'll continue to trade the IWM to the bull side. It's not as strong as everything else, but it is more reasonably priced. And I think there's some bullishness to be had in the small caps as well. Let me know what you think of the Chinese economy slowing down. Is that a little bit of a foreshadowing for the United States, or is it something we should ignore? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.